Hello, I'm Andrew Carr, Analyst Instructor at Fundamental Edge, and this is the next installment in our weekly series going through pitches and showing either what makes them okay or good or great. We have the benefit of going through hundreds of stock pitches here at Fundamental Edge. Most recently in the WITG competition, there was a field of over 100 submissions, and those started with a 2-page executive summary. From that executive summary, you really have to kind of stick the landing in communicating your analysis and communicating it cleanly so that you can advance to the finals. What I'm going to do in this one is go through another one of the finalist executive summaries and call out what made the pitch good and kind of factors that contributed to advancing to the finals. So this one is going to be for Bluebird. All right, so here's Bluebird. There's a long, we've got all this up here. This is actually very valuable real estate in a stock pitch. So you figure when somebody is looking at it for the first time, you want to have the most impactful stuff up top. I might move the thesis up top. I talked about that a little bit in the Udemy pitch in the prior episode, but let's go through the pitch. So, all right, what's the thesis here? Bluebird's compelling long, exceptional risk reward, 50% base case upside, up 100%, still below midpoint multiple, discount to peers, limited short interest. All right, shorts believe margins aren't durable, and shorts believe the roll-off of CSB grants are going to be an overhang, and actually margins are durable as suggested by the research and growable in fact, and electric school buses present a near-term opportunity from a mix shift towards propane. All right, let's go through this. So first of all, they very cleanly called out what the market believes and what their research shows. So it's very important to be objective here. And then also kind of cleanly here, there's just multiple 16 times, fiscal 27 PE, that gets 45% upside. I'd probably spell out what the PE is and the delta versus street. I know it's up here, but just to have it all in one place so it's easy to read, that can go a long way. All right, so what we see here is, okay, sell-sider can't explain margins in the last couple quarters. I think the thing here that they're calling out is there has actually been a rationalization in pricing, and so there isn't like a race to the bottom. And they've had 7 points of gross margin expansion since fiscal 23. And the interesting thing here is actually buses, once they hit a certain age, must be replaced. So in situations such as those where the bus is at end of life, those school districts are going to be buyers at any cost. So that's kind of interesting. And then this is also kind of interesting here. So this funding roll-off impact is actually overstated, and there's an opportunity in propane. All right, now, first point here is procurement won't fall off entirely. So it looks like there was a government grant that was suspended, and it looks like what school districts did, because they had some problem with the grants anyway, is they found other ways to raise the funds to buy school buses. So that would suggest that a shutoff in the CSB funding is not as big of a hit as would otherwise be implied if they had all gone through CSB funding. All right, and then we've got here the funding roll-off also benefits Bluebird propane sales, where they actually have 100% ownership of that market and there's no near-term entrant risk. So that's kind of interesting. What they're saying here, in effect, is even supposing that there was a headwind to electric school buses, school districts would then just buy propane buses, and then actually Bluebird would be an incremental beneficiary here. All right, a couple near-term upside levers that are not in numbers. Ideally, this could be quantified because I don't know exactly what this would imply if this were rolled out. That would probably be better to lay out here. So, okay, 16 times our EPS of 557, there you go. Multiple times metric. And what they did really well here is they call out where their variance is. So 7% variant revenues from pricing and mix shift to propane, and then 150 bips above street when it comes to EBITDA margins. So what I would say in this pitch is I think there are 3 things that they did well. Remember, this is a long, and so what did they start with? They didn't say Bluebird is so great. They said, here's what the market thinks. Shorts think margins aren't durable. and shorts think that this funding roll-off is going to be an overhang. And one of the most important things you can do is understand the other side of the trade. So by undermining or by dispelling the bull case or the bear case, as the case may be here, your pitch can be a lot more compelling. So they show margins above what the street expects, and they say they're 150 bips above street. And actually, the roll-off of electric school bus funding, either more electric school buses will be sold than would be implied by the multiple, because there's already alternate methods of funding. Or secondly, it will prompt a mix shift towards propane, where Bluebird is a category leader. Now, the one thing I would probably call out is it's already up 100% since March. I think that, so it's not like it's just on the lows, but I think what they did kind of nice here is, what they did nicely here is they said, despite being up 100%, it's still below its historical midpoint multiple. So that kind of signals that there could be more upside here. Now, some of the multiple is going to be impacted by this funding roll-off, but as they laid out in this other part, they actually don't think that procurement is going to fall off entirely because funding has been secured through other methods. So another thing they did well is, so they validated kind of why results will outperform a perceived overhang. And the third thing I thought they did well is just laying out what's driving the delta to street. So this is from additional price taking and mix shift, and this is because of the higher margin structure. You know, they pointed out the expansion in gross margins. So 3 things you can take away from this pitch that went to the finals. Number 1, it showed an understanding of the other side of the trade, very important. Number 2, it validated, it substantiated why results will outperform what would be implied by this perceived overhang. So it'll be kind of a narrative violation there. And thirdly, they laid out the reasons behind their deltas. So they said they're different from street, and then they said what's driving that. And so these are some ways that you can kind of get a sense of how to improve a pitch and how to make it pop. And of course, if you're interested in learning about structuring your analysis and your pitches in a way that is competitive in a very deep field, check out our weekly series where we're going through different pitches, and also head over to fundamentedge.com/analyst-academy to learn more.